Hey, what's going on, guys? I know it's been a long time since I made a video, have been really busy with work, but let's go ahead and jump into it here. So I wanted to talk about a position I opened up today. Definitely a lot of volatility in the market the last couple months, a lot of red, especially with Jerome Powell announcing they're going to be more aggressive trying to get this inflation under control. So ultimately, I understood that as the stock market is going to have a lot of volatility with potential, higher interest rate hikes in the short-term future. So, needless to say, be careful out there. A lot of volatility in the market currently. But I want to talk about Marathon Digital. This was pretty much a swing play that I opened up this morning. I purchased 100 shares, not on Robinhood, my other account, actually one of my Roth IRA accounts. And what I wanted to do was purchase it. I was just going to swing the shares, buy it. I think I got in at like 11.35. I was just going to try to sell it, maybe a 20 to $30 gain. But what I did instead was sell an in the money call option. So what I ended up doing was, like I mentioned, I bought 100 shares at, let's just go ahead and put it on this little notepad I have here. So I bought 100 shares at 11.35. And then what I ended up doing was sold a covered call at the $11 strike. So as you can see, technically that's selling below my basis, right? Below my cost basis, which is typically not what I do with covered calls. However, the premium with this was around, I think I got like 64 or $65 for it. I can't remember exactly, but let's just say I think it was like 60, let's just say 65. I think I got $65 credit. So that essentially means that I'm selling my shares away for 11.65, because you take the strike price and then whatever premium you get, for that option, that's pretty much what I'm selling them away for. So you can see here I'm getting a $30 profit on a 11.35 risk. So nothing crazy here, but it was a $30 return on 11.35 risk, was right around a 2.6% return. However, I also am getting some downside protection, which is $65, and that is, do the calculation over here, a 5.7 downside protection. So I'm making, a potential of a 2.6% return on my risk, but selling in the money, I also get a 5.7% downside protection as well. And just to summarize that, I'll go ahead and jump on the Robinhood platform and give you guys just a visual representation of this position that I took on. Pretty much, I'm getting a 2.6% upside potential with a 5.7% downside protection. I could have just sold the shares away and made like $20, but I think by being able to keep this position on with selling the covered call, I'm going to make an additional $15 or so. So nothing crazy, but this is just a small trade. I've been testing, selling, at the money and pretty much in the money covered call options. So let's go ahead and dive into here. So if you were to do this on the Robinhood platform, you would buy 100 shares and then come to the option chain and you'd click sell. And then for this instance, yeah, like I mentioned, I think I sold it for 65. You would click sell, and then you can see here your break even. This is the, oh, you guys can't see that. Here, I'll zoom out a little bit. This is your break even. So I bought them for 11.35, like I mentioned, and then by selling this call option, this is pretty much what I'm saying. Okay, I'm fine with selling my shares away at this price. Obviously, if this is below your 11.35 or your cost basis, then you're selling at a loss. So I wouldn't recommend that. But luckily with this intrinsic value and extrinsic value, it's more than my original investment. So I'm fine with selling it below my cost basis theoretically. So 11.35 is my theoretical cost basis there. So yeah, that's that. So you click continue and then sell. As you can see here, Robinhood shows a little chart, your expected profit loss. You're not going to take a loss here because your shares will just get called away. And I'm perfectly fine with that, especially on these short term swing plays. This is definitely a volatile stock. Crypto mining stock. I do have a long-term position in Riot, but Marathon, I just like, short-term plays, swing plays, cash secured puts, covered calls. So I enjoyed trading that stock for those types of trades. But yeah, guys, that's it for this video. I hope you guys enjoyed it and got some value from it. Feel free to like and subscribe below. And do remember, I'm not a financial advisor, so all this content is for educational purposes only. I just want to document my journey and educate you guys from my experience. But by all means, these are risky strategies, so seek a financial advisor for more assistance. All right, guys, thanks for watching.